Well, thanks for having me on again, and welcome to everybody who is able to attend with us this morning. Got some great information to share with you guys. I'm going to be covering how to adjust losing options trades into winners. This is what we call the holy grail of trading. Start with a quick just announcement. If you guys haven't been on any of our other educational events in January this year, we have merged. So we were formerly the Trading Profit, and we've now merged with Altos Trading. And the purpose of the merger was kind of mainly around increasing. We've grown tremendously over the last 5 years. We've grown over 20,000 students in over 100 countries across the globe. And the merger will position us to increase our scope in terms of ability to accept new clients and students and offer more products and services going down the road. So that was the primary catalyst behind the merger. And then also, I've recently launched a hedge fund, which I'll talk a little bit about here in just a minute, under Altos Capital. And so that was the other catalyst behind the merger. So anyways, we're excited to announce that, and just wanted to let you guys know, because if you've seen me before, you may have seen me as the Trading Profit, and didn't want to create any confusion around the new company name, which is Altos Trading. All right, so let's go ahead and get into it. Believe it or not, there are actually ways to adjust losing options trades. How many options traders do we have in the room with us today? If you just want to put an X in the chat box or the Q&A. Just kind of curious to get a feeling for how many options traders we have on with us today. San Ray yet? All right, lots of options traders, it looks like. Howard, cool. All right, well, I think you guys are going to get a lot out of this. So up to 75% of the losses that traders experience when trading options are actually fixable. A lot of people don't know that. And we're going to be going over a couple techniques today on how to fix losing options trades. And certainly, there's no question that losses are inevitable in trading. It's a risk that we take in the trading world, and they're really just a cost of doing business. So we do need to accept that there will be losing trades, but many of the losing trades can actually be avoided by making a few simple tweaks to the trade. And that's what we're going to go over today. So imagine if you could take a commonly traded strategy like the Iron Condor, and let's say you had a losing trade on the SPX that was down $3,900, and you were able to make a few simple tweaks to the trade and turn it into a $2,400 winner. Or here's another commonly traded option strategy, the credit spread. Imagine taking a losing credit spread trade on the QQQ that's down $580, making an adjustment to the trade and turning it into a $620 winner. Or here's another one, another strategy, the naked put. A lot of options traders trade naked puts, and it can be a great strategy, but it can also expose you to a lot of risk if you don't trade it correctly. And certainly if you don't have a backup plan to adjust a trade when it doesn't work out as you intend, it can really be detrimental. So imagine taking a losing naked put trade that's down $730, making a simple adjustment and turning it into a $540 winner. Well, here's the cool thing. These aren't hypothetical simulated results. These are actual live trade examples that we have done with our members, and we were able to actually turn these losing trades into winning trades using the adjustment techniques and tricks that I'm going to show you in our session today. Okay, so this is a actual live screenshot of my real money brokerage account at TD Ameritrade. And in the bottom right of the screen, you'll notice this screenshot was taken back in August of 2015. How many people remember what happened on August 24th, 2015? See if we get anybody here who remembers what that was. Yep, a couple people got it. It was the flash crash where the Dow opened down, I believe, a little over 1,000 points on the open that particular day. So this was a flash crash of 2015. And all of these positions that I have in my account were short puts. They were naked puts. And as you can see in the percent change column there, a lot of these positions were down big, 12%, 10%, 14%. Yet I actually managed to make a profit on the open during the flash crash of over $7,600. And I was able to do this using one of the adjustment techniques I'm going to teach you guys today. So this is what's possible when you know how to adjust losing options trades. All of these trades would have been losers. However, using a technique I'm going to teach you, I was able to turn this into a very profitable day. So did you know that there's actually an adjustment to fix virtually every bad trade? And options are really cool because we have a lot of flexibility when it comes to adjustments with different expirations, different strike prices, and we can manipulate the contract sizes, and we can go short and long using puts and calls. So there's a lot of ways to adjust and a lot of flexibility to adjust in the options market. So over the next 45 minutes or so, I'm going to reveal a few of my most effective adjustment techniques to fix losing options trades. So you guys will walk away today with a couple really great tools for your toolbox to help you guys fix losing options trades for some of the more commonly traded option strategies. So we're talking about credit spreads. And if you have a losing credit spread, I'm going to show you how you can use a delta neutral hedge to turn it into a winner, or a losing naked put, how you can use a horizontal roll to turn it into a winner, or another commonly traded option strategy, the long call or the long put, and how you can turn that from into a vertical spread and turn the losing trade into a winner. So some really cool stuff to cover with you guys. If you haven't been on one of my presentations before, just a little background on myself. I'm the chief investment strategist at Altos Trading. I have over 20 years of experience trading the stock and options market. And we have over 20,000 members in over 100 countries across the globe. I'm also a hedge fund manager, so I manage capital at Altos Capital. And I became a professional trader to achieve freedom. And this is really the reason, I think, behind why we trade. A lot of people get lured into trading because they see it as easy money. And trading can be very simple, but it is not by any means easy. And there's a lot of trial and error and tribulations that we go through as traders before we actually reach success. And for me, it took well over a decade to get to that point of losing money before I could actually become consistently profitable. But I ultimately decided to trade for a living because I wanted freedom, not just financial freedom, but freedom to do what I want with my time. And that's really the reason that I trade. And trading does allow me to do that. We're also the only trade alert service, and actually I need to update this slide, with over 100, this says 120, it's actually now over 200 straight winning trades in one of our trade alert services. And I'll talk to you guys a little bit about that today. So let's start out talking about selling puts for income. This is one of my favorite core strategies, and it's one that some of you on today with us may have tried at some point in the past. Maybe you've had some success, maybe you've had some failures. And I'll talk to you about when there are failures with this strategy, what we can do to mitigate risk and turn losing trades into winning trades. So if you're not familiar with selling puts for income, a naked put or a short put is basically when you sell to open put contracts. So rather than buying and taking a directional trade, rather than buying a put, we're selling the put at initiation of the trade. So we're basically selling the contracts to the buyer. And for that, we collect a premium or a credit into our brokerage account for entering the trade. So it's basically an income strategy where we collect the money up front when the trade is initiated. When the stock rises, whatever stock or equity or security that you sell the puts against, the put options that you sold expire out of the money, and you get to keep the entire premium you collected when you sold them. So that's really cool, right? You get to keep the money that was put into your brokerage account when you put the trade on. So as an example, let's say that we have a stock, ABC stock, and it's trading at $100 per share. And you decide to sell to open 10 of the 95 strike contracts. So we're selling 5 points out of the money for $2.50 a contract, and these expire in 30 days. Since each contract controls 100 shares of stock, you get an immediate deposit of $2,500 into your brokerage account. That's great. Who wouldn't want that? So as long as ABC stock closes above $95, that's the strike price where we sold our puts, at the expiration date, you keep the entire $2,500 premium you received when you initiated the trade. So this is cool because you have the opportunity to profit on a variety of outcomes. If the stock stays where it is, you still keep the $2,500. If the stock goes up, you keep the $2,500 that you collected. And if the stock goes down, as long as it doesn't go down below your $95 strike price, you still keep the $2,500. So you can profit from three outcomes versus buying a put. A directional play on a put would require the stock go down and that you time it exactly correctly, in addition to getting a lot of other things right, like implied volatility and a lot of the other variables involving the Greeks that go into buying options and being right, and that becomes very difficult. So that example where you keep the $2,500 is great, but what happens when things go wrong? Because they will inevitably go wrong. Well, the primary exit strategy is the one we just looked at in that example, where the underlying stock finishes above your strike price at expiration and you get to keep 100% of the premium. And that happens about 85% of the time when executed the way that we teach the strategy. And generally, we teach to sell at the 20 delta. So in terms of selecting your strike price, if you sell the 20 delta, you've got about an 80 to 85% chance that that strike price will finish below the price of the underlying security. So that's our primary exit strategy, and it works the majority of the time. If it doesn't and things go wrong and the trade moves against us, we have a secondary exit strategy. And this is where we make an adjustment to the trade. And one of my favorite adjustment strategies that I'm going to teach you guys today often results in even greater profits than what we initially collected when we entered the trade to begin with. So let's talk about how to adjust a losing short put. The first technique is rolling. So rolling simply involves closing out our initial trade, the short puts that we entered to begin with, and opening a new trade at a further out expiration. So we use the same strike price, and going back to our example, that would be the 95 strike price, and we use the same number of contracts. So if we had opened 10 contracts initially, we would stick with the same number of contracts. We would roll, same strike price, same number of contracts. And we want to do this ideally for an equal or greater credit or deposit into our account. And this is what's called staying net cash positive. And we'll talk a little bit about that here in a minute. But we want the credit that we receive on the rolling adjustment to be greater than the debit. So this one adjustment technique alone, and in fact, it's the one we've used exclusively in our trade alert service, has resulted in just now over 200 closed trades in a row, closed winners in a row. And that's really remarkable. And we wouldn't have been able to do it without this adjustment technique. So it works very, very well. Now, there's a second adjustment technique that you can use to adjust a losing naked put or short put trade, and that's called delta neutral hedging. And this is the one that I used on that day of the flash crash, and I'll show you the exact calculation here in a minute that I used on that particular day and how you can execute it yourself on a position in a short put that is losing money. And so basically delta neutral hedging involves transforming a naked put into a delta neutral position, and all you have to do that is buy to open enough at the money or near the money put options in order to completely, or as completely as possible, you'll see here in a second, you often can't get exact, but we get close, to offset the positive delta of your existing short put options. And by executing this adjustment, if the underlying security continues to fall, you actually profit on the put options that you purchased, and you profit more on those than you do, than you lose on the short puts. And so it offsets losses on those that you sold to begin with as the equity continues to move lower. And generally I'll execute this adjustment technique if my short puts move in the money, and it is a bit more aggressive. So this is one I would use if we break a strong support level, or the market is moving dramatically to the downside, this can work out very well, especially as implied volatility increases. So this sounds a little bit complex, but I'm going to show you exactly how to execute it using a very simple calculation. So again, this is the screenshot from August 24th, 2015, the day of the flash crash. And I'm going to show you exactly how I turned these losing short put positions into winning trades. So here's the calculation. You simply take the number of contracts in your position and you multiply it by the delta times 100 to get your position delta. Okay, so that's the first step. And then once you have your position delta, you divide the at the money option delta by the position delta to get the number of contracts to buy. Okay, and we'll look at an example here in just a second. But the result is a delta neutral hedge that can profit on a decline in the underlying security. That's pretty cool. So to help clarify this, let's look at an example. This is an options chain. It's just a randomly selected chain from a stock. And let's say that, so this is the put column we're looking at here. Let's say that we had sold initially the 58 strike puts. This stock has obviously gone down and those 58 strike puts are now trading in the money. Okay, so now we're going to execute a delta neutral hedge so that if the stock continues to go down, we can profit on the move. All right, so there's our initial position and there's our delta, 59. You can ignore the negative there. That puts always have a negative delta, calls have a positive delta, but really all we need is that number 0.59. Okay, so we multiply that delta by 100. Okay, so we get 59, and then we multiply it by the number of contracts. Remember, this is the first step in our calculation. And that gives us a position delta of 590. All right, so now we have our position delta, that's step one. We're then gonna divide the at the money delta. Okay, so the closest strike price to whatever the current underlying security price is, in this case, 57. And we're gonna divide that into 590, and that gives us our delta neutral hedge number of 12.29. So this is the number of contracts that we're going to want to buy to create a delta neutral hedge, to hedge our position that is currently losing money. Now, of course, you can't buy 12.29 contracts, so we'll round either up or down to the closest number. In this case, we'd round down to 12. So we know that we need to buy 12 contracts at the 57 strike price to completely, or as completely as possible, it's going to be fairly close, offset the delta in our 58 strike puts. All right, so we're short 10 58 strike puts, but we're long 12 57 strike puts. And so the delta is a dynamic moving number. So if the underlying security continues to move down, then your delta is going to increase and the profit you make on the 12 contracts at the 57 strike will outpace the losses on the 58 strike. Looks like Mike's asking, how did you get 590? So again, the 590 is simply the delta from the strike price of our initial short puts. You can see there 59. We multiply that by 100. So it's actually 0.59. We multiply that by 100. And then we multiply it by the number of contracts. So that's that first step you see up here on the left here. And that gives us the 590. And then we simply divide the at the money delta into that position delta to get the number of contracts that we buy to create a delta neutral hedge. Yep, 10 contracts. Yep, that's right. Cool. All right. Let's look at an example of adjusting a short put. Okay, so now we're going to go back to our rolling technique. So we covered how to do a delta neutral hedge. Let's look at a rolling adjustment. This is actually a real live trade example from our trade alert service, and I selected it because it's really a worst case scenario. It's one of the worst trades we've actually ever issued, but I want to use it to demonstrate that even when we're not right, we can actually do very well and sometimes better. So in this particular example, this is going back to 2017, and we've had this alert service open now for close to 5 years. So going back 2017, August 10th, we sold puts on Sienna that expired August week 3, and we sold the 2450 strike puts at $27 a contract. Unfortunately, Sienna moved down, so it moved against us. And about a week later, we used the rolling adjustment. So we started out at a $27 per contract credit. We took a $1 debit and rolled out to August week 4 at the same strike price, same number of contracts, and we collected a premium of $110 per contract. So you see how we are staying net cash positive by collecting more premium than we're being debited, in this case by $10 a contract. The stock continued to go down. So another week later, we rolled it again, but this time we captured some profit on the roll. This time the debit was $52 a contract, so we captured about half the premium from the previous roll. This time we rolled out to September week 2. Again, we're staying net cash positive. We're actually able to roll down in strike price to the 22.50 strike and collect $58 per contract. So again, look, we're staying net cash positive, collecting more in premium than we're being debited. The stock continues to go down. September 8th, we roll again, this time for an $85 per contract debit. We roll out to September week 4, same strike price at the 22.50 strike, and we collect $100 per contract. The stock continues to go down, but we do collect a little bit of premium from the previous roll, $10 a contract. September 22nd, we roll out to October week 1. All right, so this time, same number of contracts, same strike price, we collect $103 a contract. CNF starts to go back up and recovers a bit. It actually never does recover back above our initial strike price, but because of the rolling adjustments we've executed and staying net cash positive on each roll, on October 6th, so just a little under 2 months since we initially entered this trade, and we intended to be in the trade for only a couple weeks initially. We ended up being in it for a couple months, but we actually closed the trade at a 17-cent debit and pocketed $540 per 10 contracts traded. So notice what happened here. We started out with a $270 per contract, or $27 per contract premium or credit that we collected when we initiated the trade. So on 10 contracts, that's $270. By the end of this, after these rolling adjustments that we've executed, we ended up with twice that amount. So we actually doubled our profit potential by executing these 4 or 5 rolling adjustments. Okay, so pretty incredible when you know how to use this adjustment technique correctly. And it works because it allows you to stay net cash positive while taking advantages of decreases in implied volatility and increases in the underlying share price. And again, the stock doesn't even have to recover back above your initial short put strike price. We can actually get out of these trades often when the stock continues to go down because we are taking advantage of changes in implied volatility and staying net cash positive on the rolling adjustments. All right, so that's short puts. How many credit spread or iron condor traders do we have on? Just put an X in the chat box. I want to see how many people have traded credit spreads. Yeah, San Ray. Yeah, a lot of you guys have traded credit spreads. Cool. Yeah, this is a consistent strategy. Generally, we win more of these than we lose. The problem is they have a negative risk reward ratio in terms of the potential loss to potential profit. So oftentimes when we have a losing trade, we can lose more than we make on our winning trades, and it can wipe out a series of the winners. So without a backup plan and an effective adjustment technique, this can ultimately be a losing strategy. So I'm going to show you guys how to adjust a losing credit spread or iron condor, which is simply the combination of a put spread and a call spread. And if you're not familiar with the strategy, they're basically created by buying cheaper option contracts and simultaneously writing an equal number of more expensive option contracts. And it's called a credit spread because you actually receive cash or net credit for executing them, just like the naked put strategy we just covered. And the credit to your option trading account is why they're called credit spreads. So an iron condor, like I just mentioned, is simply the combination of 2 credit spreads. It's a bull put spread and a bear call spread on the same underlying security with the same expiration. So let's talk about how to adjust a losing credit spread or iron condor, because the same technique can apply to both. depending on which side of your iron condor is breached, you would just treat it as a credit spread. And to adjust a credit spread or iron condor, we can also use the delta neutral hedging technique we just talked about. It's just executed a little bit differently with a spread trade. So in order to transform a credit spread or iron condor into a delta neutral position, if either the short put or short call strike is breached, I close half of the contracts at the breach strike. And what this does is it helps offset the losses in the long strike and even produce a profit if the underlying continues to move past the spread. Okay, so this is one you want to use if you get a strong move past your short strike of your spread, whether it's a credit spread or one side of the iron condor. And it can produce winning trades with a profit greater than the initial credit, just like we looked at in the short put example. So let's take a look at an example of adjusting an iron condor. And again, this can be applied to a credit spread as well. And this is actually another live real trade example issued in our trade alert, one of our trade alert services that we run on credit spreads and iron condors. And this one's from back in 2018, kind of another worst case scenario. I like to share the bad examples to show how effective these adjustment techniques can be. And on June 15th of 2018, we alerted our subscribers to open an iron condor on the SPX within June week 5 expiration and collect $110 per contract. The SPX moved down and breached our 27.25 strike puts. Okay, it made an aggressive move to the downside. So we adjusted this spread by using a delta neutral hedge. And what we did is we closed half of the 27.25 strike puts. So this neutralized the delta in that side of the spread. The SPX continued to move down, and on June 27th, we were actually able to close the SPX iron condor for $240 a contract. Now remember, we started this trade out collecting $110 a contract. So we've now closed it at $240 a contract, more than twice what we had initially anticipated making on the trade. And we took what was a $3,900 losing trade on the SPX and turned it into a $2,400 winning trade per 10 contracts traded using a delta neutral hedge. And it's so simple to execute. You simply close half of your contracts at your short strike, in this case 27.25. So if you've been trading, let's say 4 contracts, you close out two contracts. If you traded 8, you close out 4. And that's really how you execute it. It's very simple. And it works magic when the underlying continues to move in the direction of your breach vertical credit spread, or in this case, iron condor. All right, so those are some adjustment techniques that you guys can use for credit spreads, iron condors, short puts. Again, there's a lot of different ways to adjust these. These are just a couple of our more commonly used effective adjustment techniques that I wanted to share with you guys and teach you guys today. There are many, many more that we use, and if we had time, I would go through those with you. But I wanted to at least give you something that you can take away today and use in your own trading. So hopefully you got a lot out of those. And if you have any questions, feel free to type those in the chat box. We will open this up to Q&A here in just a little bit. But I want to first tell you about a special that we're running today for being on with us. We have a special that's exclusive to the InvestorExpos attendees, and it's our Trade Alert Service bundle package. So what it gives you is access to all of my best trades in real time, and we issue these after market hours, so there's no need to sit and watch your computer all day. And we send them out via email and our trading app, and we're actually launching a text alert service as well here in the next month. So there's multiple ways to get our alerts, but again, they're sent out after hours. So if you have a day job or you don't want to be at your computer during the day, you don't need to be, because everything we send out is sent out after market hours, and you have a lot of time to get your orders in with your broker before the market opens the next day. We're not doing any day trading or any scalping or anything crazy like that here. And the cool thing is that trade adjustments are included in our package. So you get all 3 of our alert services, the put writer trade alerts, the iron condor trade alerts, which also include credit spreads, and our stock trade alerts. And you also get all the trade adjustments that come along with those if the trade doesn't work out initially. And 80 to 85% of the time it will. We close our trades out for a profit 80 to 85% of the time without having to make any adjustments. And if we do have to make an adjustment, then we will send that out in an alert. I got a question here, how close to expiration do you adjust? It depends on the situation. That's actually a good question. It's variable. It depends on the situation. It depends on the volatility of the underlying. It depends on the delta, the gamma. And so there are a number of variables that would factor into, and also the strategy, I should say. So the put writer strategy, we tend to adjust closer to expiration. Credit spreads and around condors, we tend to adjust on a breach. But again, it just is variable depending on the strategy, market conditions, etc. Okay, so I'm also going to throw in a special bonus, and I'll tell you guys how you can get our bonus. There's actually 2 bonuses today if you decide to join our Trade Alert Bundle package. I just put the finishing touches on my brand new ebook, How to Create Risk-Free Trades and Let Your Profits Run with Little or No Risk. So if you guys join us today to try out the Trade Alert Bundle package, which I'll tell you how you can do here in a minute, you also get my brand new ebook, How to Create Risk-Free Trades. This is also an adjustment technique that you can use with any strategy in any market, whether you trade options, futures, Forex, stocks. You can use this special technique that I outline in my book to create risk-free trades and still let your profits run. It's a really cool technique. I use it in my own trading. So this is a special bonus for joining us today. And I'll tell you how you can do that here in just a minute. So let's go through some results. These are our results from our Iron Condor and credit spread service from 2019, all of last year. So you can see about how many trades we issue per month. And at the end of the year, we on 10 contracts per trade. Of course, this is all scalable. We ended with a profit of $6,215 for the year, not including commissions and fees. And again, based on 10 contracts, but this is all scalable. If you traded 20, you would have had over a $12,000 profit for the year. These are the results from our put writer alert service from 2019. And we generally issue 1 trade alert per strategy per week. So the bundle package, you're going to get generally 3 to 4 alerts per week. And this is our put writer service. Closed out the year with a profit of over $21,000 on 10 contracts. Again, scalable, depending on how many contracts you're able to trade in your account. Here's our guarantee. If you decide to join us today and try out our Trade Alert Bundle package, if you aren't profitable trading the alerts in the first 90 days, we're going to give you $1,000 to spend on any of our highly acclaimed online trading courses, coaching service, or a trade trend signal software, and we'll give you an additional year of trade alerts on us. That's how confident we are in our results, and that's our 90-day guarantee if you decide to try out the Trade Alert Bundle package. So let's take a look at what some of our customers are saying. Artie says, thanks for the good work. You've changed my life for the better. Mike says, A+++, very strongly recommended for anyone looking to grow their portfolio the easy way. Frank says, so far I'm up about $1,400 net live since February 19th. Thank you so much for the excellence and attention to detail on doing what you do. Randall says, I've been very happy with Jeff's trade alert services. Jeff's alerts are well described and easy to fill. And by the way, when I send out the alerts, they have a full explanation and rationale behind why the alert's being issued. They come with a chart. They come with exact instructions on how to enter, where to take your profits. Everything that you need to execute the alerts is included, including all the rationale behind it and the adjustments if we need to make an adjustment to the trade. Paul says, thanks for your courses and trade alert service. You're a great trader and instructor. How refreshing to have someone produce a product that does what it says. I thought it was too good to be true at first, but you've proven me wrong. Thanks and keep up the good work. And Keith says, wow, worth every penny. The alerts are awesome. This course is also great and easy to learn. Okay, so who is this for? We often get asked, is this going to work for me? Well, the good news is it works for everyone from beginners up to seasoned traders. We have people who are just starting out that have never even placed an options trade in their account. And because our alerts include very detailed instructions that can simply be read to your broker or entered into your online trading platform, it works for beginners. And we also have seasoned traders that have been trading for years and decades that use our trade alerts. People who work full-time jobs or part-time or retired. We have, all the above. So if you don't want to be tied to your computer, or you have a full-time job, or you're retired and you want to supplement your income, it works for all of those people. And it works for traders worldwide. We have students in over 100 countries across the globe that use our alert services. It also works with any size account, whether you're trading one contract per trade or 100. So we have people that have smaller accounts that may not take all of our trades. It may only trade one or two contracts, but they're able to capitalize on the positive results that we produce in our alert services, even though they have a small account. And we have people that have 6-7-figure accounts who trade our alerts as well and trade many, many contracts. It also works for traders who want to learn how to trade on their own and for traders who want to be spoon-fed. So again, we give all the rationale and teachings behind our trade alerts. And I'm actually going to throw in a second bonus here in a second that teaches all of my strategies. So if you want to learn this learn to do this on your own and eventually move out of the trade alerts and completely do this on your own, or stay in the trade alerts. We have a lot of members who use our trade alerts and then also learn to do this on their own, and they add additional trades. And that's a great learning experience as well. And so it works for traders who want to learn, but it also works for people who just want simply to receive the instructions, enter them in with their broker, and move about their day. So whatever you want to do, it works. So to take advantage of our special, you can simply go to www.thetradingprofit.com/alert-bundle.special. Sorry, that's kind of a long link there, but that's where you can join us today. And you'll see that you can try out the service for 30 days. Okay, and we'll do a Q&A here in a minute. I'll start taking questions, and so you can begin typing those into the chat box if you'd like. But if you go to the link that we just gave you, you get everything here that you see on your screen, 12 to 15 real-time trade alerts per month. I think Anna might be putting this in the link in the chat box too. You get our put writer alert service, our credit spread and iron condor alert service, our stock alert service. Again, all of the alerts are sent after market hours. We have an 80% or greater win rate across all of these services. Simply go to thetradingprofit.com/alert-bundle-special, and you can take advantage of our special offer for 30 days. This is a 30-day trial, and it's only $7 to try it out. So this is really risk-free. You can try it even if you're not putting real money to work. You can try it out and paper trade it for only $7 and see how it works for you. All right, and then like I mentioned, I'm going to throw in another bonus here. Our first 20 subscribers are going to receive a gift valued at $697. So who wouldn't spend $7 to get something that's valued at nearly $700? And that's our online professional trading series course. So it includes over 9.5 hours of content, and it teaches all of the strategies that I've covered with you today, plus more. It covers stocks, options, and Forex, and it teaches all of the adjustment techniques that we use to adjust losing trades in all of these markets. So it's a really great course. I teach it myself. You can take it at your own pace. And again, it's probably close to 10 hours of content. So it's a lot of really good material that also covers live trade examples. So it teaches you everything you need if you decide you want to do this on your own. Okay, so I'm going to start taking some questions. Again, go to the www.thetradingprofit.com/alert-bundle.special, and you can try out the trade alert bundle package for only $7 for 30 days. Thor's asking, does it auto renew at what cost? Yeah, so if you decide you want to continue with the trade alerts after the 30-day special, then you have a couple options. So when you go to the checkout page, you're going to have a couple options. In fact, let me just go ahead and see if I can pull that up here so you guys can see it. All right. Let's see, that link again is alert-bundle-special. All right, so if you scroll down, you're going to see that there's a quarterly option and an annual option, okay? So depending on which one you select, it would either renew at a quarterly subscription at 72% off our regular price, or if you choose the annual, you get 79% off the regular price. Okay, there's no contracts, no obligation. If you decide you don't want to continue with the trade alerts, you can simply shoot us an email, let us know, and you won't be charged. So there's no obligation to renew. If you do decide you want to continue, which virtually all of our members do because they see how effective the alerts are, then it would depend on which option you select. So the quarterly, okay, if you go, is going to renew at $4.97 per quarter. All right, and again, that's 72% off the regular price. And if you choose the annual, it renews at $19.97 for the year. All right, so you're going to get a discount for doing those. Let me see what other questions we have here. Steve's asking, will we have access to this webinar on a recorded? Yeah, Steve, I believe InvestorExpos is recording these and we'll give you access after the events. Let's see. Getting the highest level to sell naked put impossible. See, yeah, somebody's saying that they're not approved for naked puts because of their account size. And that's why we package this as a bundle. We don't anticipate that you'll be able to trade every strategy or every alert. So even if you decide, and the strategy just may not be right for you. Basically what you would do is you can pick which alerts you want to trade. So if you only want to do credit spreads, or if you just want to do iron condors, then you can do that. Or if you just want to trade stocks. So we've got strategies in there for everybody, depending on their option level approval from their broker, their account size, etc. No, the 1997, you actually get 79% off of that. So that's the regular price. So again, this is renewing at the discounted price. If I was just using credit spread alerts, how many can I expect per month? Good question. So each alert service issues generally 4 to 5 alerts per month. So if you're just doing credit spreads and iron condors, you'd get roughly 4 to 5 trades per month. If you're trading all 3 of the alert services, you'll get in total about 12 to 15 trade alerts per month. Great question. Yeah. So we're discounting the package as a special. So even if you don't take all the alerts, you're still getting a fantastic deal, and you're going to actually be paying less if you were just to buy the alert service on its own individually. Because generally we issue our subscriptions individually for these trade alert services. So we're only offering the bundle package as a special for the event today. Let's see. Yeah, we do iron condors too. Yep, so we do 4 to 5 credit spreads and or iron condors a month. Okay. Steve's asking, do we trade earnings reports in a special way? It depends on the strategy. So sometimes we will play earnings around some of the strategies, taking advantage of spikes in implied volatility and then the volatility crush that occurs after the earnings release. Just kind of depends on the strategy and other market variables and implied moves around the earnings release. So we will do those from time to time, especially in the stock alert service or the put writer service. We wouldn't trade play earnings in the credit spread or iron condor service. We actually predominantly trade credit spreads and iron condors on the indices or ETFs that track the indices. Yeah, Steve says that IB crush is how we trade. Yep, absolutely. All right. Richard's asking, do we use straddles to trade earnings? No, we don't do straddles in any of our alert services. Just puts, short puts, iron condors, credit spreads, and stocks. Someone's asking, why were there losses in credit spreads if you can adjust them with your techniques? Yeah, so like I said in the beginning, we can generally adjust about 75% of the losers into winners. We cannot adjust every single loser into a winner. You know, if we could do that, we'd you know, we would just go big and on every single trade and we'd be multi-billionaires. There are losing trades in all strategies, all systems of trading, and ours is no different. We will have losing trades from time to time. Often the adjustment techniques can mitigate the losses, and even if we adjust the trade, it may result in a losing trade, but maybe the loss will be less than when we had initially, or if what we would have initially taken on that trade if we had just exited without adjusting it. And oftentimes we can adjust it into a winner, but not 100% of the time. All right. Looks like I just got just a few minutes left here. Looks like I've got most of the questions answered. Richard's asking to use algos for trading. We do have an algorithmic trading platform, a signal software called TradeTrend that can be found at tradetrend.com. That's not part of our offer today or our alert service, although we do use some of the algorithms in the TradeTrend signal software to select some of our trades. But for purposes of our alert services, it's really more a combination of that and discretionary trading. We still got a few questions coming in. Steve's asking, is the put writer service the most consistently profitable over time? Steve, yes, it has been. Again, we're running that service now for close to 5 years. We've never had a losing month or a losing year in the service, so it has been very consistent in terms of profitability. It is also the easiest to adjust in terms of adjustment techniques. Sandra is saying your signals come after market close. Option prices change overnight. Yeah, so good. That's a really good point and good question. So obviously the markets can open to the upside or downside. They can gap overnight due to futures trading. We give a range, so we give a limit order price for all of our trade alerts. So there's a range. So it's basically would read, you know, get in at this limit price or better. And if we can't get filled, if there's movement overnight and the option pricing changes, we'll basically reevaluate the trade. We'll either issue a new alert to get in at a different strike price or different credit, or we'll move on to a different opportunity if it doesn't make sense anymore. Jennifer's asking, I'll be on the road next week for 4 to 5 days. May I join after I come back? Yeah, just shoot us an email. Tell us you were on the session today, and we'll go ahead and give you the link. We'll keep it active for you. Okay, Howard's asking, in stock alert service, what is the average trade duration? Generally, for all of our trade alerts, the average trade duration is 2 to 3 weeks, whether it's the option spreads, put writer, or our stock alerts. If we need to adjust the trade, then there's a potential of being in it longer than we initially anticipate. But often we're able to adjust out of some of those trades in a week or two. All right. All right, well, I think I've answered everything. If there are any other questions, you can shoot us an email at support@altostrading.com. And I'm going to go ahead and pass it back over to Anna, as it looks like I'm out of time.
Yeah, we're about time. And just before you go, please take a last question from Greg.
Oh, sure. Greg says, I signed up right away. How do I know if I got that book? Greg, actually, anyone who signs up gets the book. So you got it. We'll send it out to you. Give us a little bit of time. We've got a lot of people signing up. Give us some time to respond back, because we've got to write everybody back who's joining us. When we write you back, you'll get the ebook and an attachment. And then the first 20 subscribers that joined us, and that, again, we'll have to take some time to see who the first 20 were. We'll get the Professional Trading Series online course valued at $697. And then I saw somebody ask which service was the one with hundreds of trades without a loss. So the put writer alert service is the service where we closed over 200 consecutive winning trades with, and again, that's with trade adjustments. All right. Again, guys, if I didn't get to your question, just shoot us an email, support@altostrading.com. And thanks so much for having me on today.
So I want to thank everybody always. People don't realize how much time and effort we put into putting on these webinars. And I want to thank the presenters for one, because so much work goes into doing this. It's really an amazing amount of time. But of course, I want to thank all the attendees, because you're the main reason that we're here. We want everybody that comes to these events and puts on these events. We really, really try hard. I know that I do, that I would do anything in my power to help you to become successful if you choose to do what I'm doing and if you choose to join up with us. And I'm sure that all of the other presenters feel the same way. So in light of that, if you have any questions or need any help from me, because I always forget to give our email in these presentations, please just email me at help@10minutetrades.com. And it's the numbers 10-minute trades, help@10minutetrades.com. So I'm going to get started right now. My presentation is called Daily Market Movers, the key to trading on your own schedule. My name is Leigh Goldstein, and I am the trading director for 10-Minute Trades. That really is me. I'm a musician as well. And a lot of you have seen my presentations. A lot of my members are here because they always come and support me, and I love them for that. Really appreciate it. And in my heart, there is nothing that I love more than doing music. And I kind of backstepped into trading because I was using a computer to connect to my synthesizer. And I wound up learning how to trade on my computer, and that's how I got into trading. I was helping my mom with her investments, and that's how I got started. I'm completely self-taught, just like probably most of the folks that are in this trade room or in this webinar room. Most of you, I'm guessing, are self-taught. I'm also guessing that you jump around from guru to guru. We all do the same things. Let me just go through the one disclaimer, just so everyone understands that everything I'm going to talk about is educational purposes. It's giving you a window into how I would do things. I'm not a financial advisor. I'm not a CPA, and I don't want you to do exactly what I do. I want you to take what I do and turn it into your own system, your own method, your own way. I truly believe that you should never trade over your head. Don't trade money you can't afford to lose. But even more importantly, I believe that if you do the right things, whatever system you choose, you can be successful. But I want to just go through a couple of things that you should not do. No matter what, and no matter how you decide to trade, do not underfund your account. Put in enough money so you can trade without worrying every second about your next trade. You could have a bad trade. You could have 2 bad trades in a row. And if that happens and it gets so close to bringing your account very low, all you'll do is worry and you won't be able to trade. So most traders underfund their accounts. It's one of the biggest errors that people make. Try to fund your account with enough money so that you can trade without worrying if you have a couple of bad trades. Secondly, trade wired. Don't trade wireless, okay? And don't trade on a tablet. All right, trade on a good, powerful computer. Doesn't have to be a gaming computer. Doesn't have to be a trading, quote unquote, trading computer. If it's got gaming computer specs, it's generally going to be fast enough to be a good trading machine. But trade on a machine that's fast enough, has good enough internet. If you can't afford good internet, or if you don't have good internet in your area, subscribe to a VPS service, a virtual private server, where you're logging into a computer that potentially is near the servers in Chicago. It can really help you get better fills with all the types of trading that you might be doing. In other words, put the odds in your favor. Put all of the things that you have control of on your side so that you can be a successful trader. So when you decided to become a trader, didn't you realize that you didn't realize, I should say, that you'd be spending all day, every day locked in a room with your computer? The sad reality for most traders is that day traders are typically spending 5 to 6 hours a day staring at their charts, waiting around for complicated setups to appear. That's the reality of most trading. Swing traders are waiting days to weeks to find out whether they've won or lost. Options traders, they can wait months. Meanwhile, your life is passing you by. You're wasting all that time staring at your computer. And you're hoping that indicator A will cross indicator B and the trade is going to magically appear. But there is really a better way, and that's what 10-minute trades is all about. We call it appointment-based trading. The appointment-based trading method, it's simple, it's time-based, and that's our approach to the market. You can schedule your trades on specific days, specific times, up to a month in advance. And best of all, while all trading has risk, appointment trading is no riskier than those other forms of trading. Appointment-based trading used to be called news trading. News trading, you were always warned, don't trade the news, it's dangerous, but it's an old wives' tale. Yes, it's every now and then you could have a bad trade, but that's no different than any other system you'd be involved in. I am telling you from experience that appointment-based trading is no more risky than any other form of trading. So what triggers an appointment-based trade? Why can we trade on a schedule? The first trigger category is high impact economic reports. The category number 2 is big company earnings reports. They could trigger market events. And then trigger category 3 could be end of the day trades. It could be trade opens. There's many categories, believe it or not. There are hundreds of triggers within these categories that you can pick and choose to fit your schedule. And let me show you how. First step is you want to find the trade. We use economic calendars to find events that will move the market. And there are a multitude of great economic calendars. ForexFactory.com, Investing.com, Econoday, Financial Juice is one of my recent favorites. Let me give you a quick idea just so you could see what I'm talking about. I'll show you exactly what I mean by bringing up Forex Factory, for instance. This is what Forex Factory looks like, okay? What you do is you click on calendar. It shows you a calendar. It shows you results of the various news market events that took place that day. If we go to today, you can actually see what happened today. It's January 30th. And these events start early in the morning. If you're overseas, you could do this overseas because there's a ton of overseas news. There's also news that starts in the US, 7 in the morning. We had a British economic report. Quite a few of my members traded that this morning. Advanced GDP came out this morning. Natural gas. All of these things can be found on the various calendars, and the calendars have their own methods that I'm going to get into next of showing you what might be more impactful than something else so that you know if you should trade it. Forex Factory, you saw that there were colors. Yellow might mean low impact event, orange might mean a medium, red might mean high impact. But keep in mind, it's very important that the color codes are a guide, but nothing that anyone tells you should ever be considered written in stone, because sometimes you make a change. Sometimes the information is not correct. And you always want to make sure that you back test and try things in sim before you do it in real life. Make sure the type of trading is right for you. Just as an area of interest to prove that point, when you look at Forex Factory, they give the natural gas report a yellow color. Now, the natural gas report was today. Everybody knows that natural gas is not a yellow, it's a red. it moves the natural gas market significantly almost every week. When the news comes out, it's not a yellow, low impact, it's a red, it's a high impact report. So don't always take what you see as the gospel. If you're part of a service and you're a member, talk to your quote unquote guru and double check with the person that you're dealing with that the information you're looking at is correct, because it's critical to have correct information to trade properly. Start by back testing the high impact events. That's the way that we do it. In order to find trades, we'll back test them first. Then you can go to your medium impact, then low impact. Pick the trades that'll fit your schedule the best. And then, of course, look for reports that are released at a specific time. And we do something really, really great for all our members, and you all could take advantage of it. It's a free gift also. If you go to our website, 10minutetrades.com, put in your email, we will sign you up for our free weekly schedule. We'll send it to you every week. And it's a schedule of all of the events we're looking at each week to trade, either in our trade room or events we're just looking at. This is a recent schedule. This was this week's schedule. Today, the end of the day, I'm going to trade Amazon earnings, or try to anyway. We're looking at Chinese manufacturing news tonight, not trading it, we're looking at it. And then tomorrow we have 3 trade rooms, actually 2 trade rooms. Two of the trades will be in the same trade room. And that's another important element about what we do. I'm not here selling a trade room today at all, but I believe that trade rooms in general, if they're good for us, our trade room is the greatest trade room. It's important. We go over everything, all of the reports that we release, we discuss them. We repair anything that might have changed because the market's more volatile at that moment before a trade. The trade room is where everything flows from. So I love our trade room, and I think it's a very important place. Investing.com is the second website that we use for calendar. It's an excellent calendar. Their calendar shows up and shows you the actual news result. Very often, it'll show you the news result the moment that the news comes out. So it's a very nice calendar, investing.com. And it looks something like this. You can look at a whole week on the calendar. Scroll down, and they don't use color coding, they use bulls. So they call 3 bulls more impactful than 2 bulls. And you can just hover over things and you can see what they're calling it: moderate volatility. 1 bull is low volatility. And again, check with the people you're trading with, other traders. Is the information correct? I've seen wrong dates. I've seen everything. You've seen everything happen in trading. You want to be careful. Make sure you arm yourself with good information. And then econoday.com is also a great calendar. I like their global calendar. In fact, any calendar that's global for what we do is important, because sometimes you might have a 4 a.m. in the morning trade that you might want to get up for, or you might live in the United Kingdom and that is 10 o'clock your morning. So our service is awesome for people all over the world. So why do these reports work? What's the trigger that makes them work? For example, why does natural gas move the market almost every week? Well, if you understand what happens every Thursday at 10:30 Eastern time, a report comes out and it tells us how much natural gas the US has on hand. But more importantly, it tells us how much natural gas was used. But here's the key, and I probably should have just left it on the screen for us. The key is not so much the exact result, but the key is the offset. How much was forecasted versus how much was actually used. So in other words, if they're expecting on the natural gas report, for instance, today at 10:30, natural gas came out and much more was used than expected. More often than not, that would cause natural gas prices to rise. and they would burst. They wouldn't just rise and dribble, they would go up rather quickly, okay? Natural gas is not a slow trade. And in fact, most of the trades we take, the beauty of the trades is they're quick and they're over fast. And that's why we call ourselves 10-minute trades. Let me show you a quick trade that we took the other day, this week. One of our big successful, what we call next generation trades, is Australian jobs, or the API report. There's actually two of them. I just want to make sure that I show you the right trade. You know what? I've got Australian jobs. Let me show you the recent Australian jobs trade. It was quite amazing. It came out 7:30 a couple of days ago. It's their version of their employment report. The way that it works is we issue a report the day before this trade is released. That's what I'm going to talk about today, is the reports that we issue. They help you to understand how I'm going to trade this report. I traded this report live. My software put the brackets on the chart that I trade. We use NinjaTrader. We trade futures, and I was trading the Australian dollar in this particular case. I'll say that again, because you must use NinjaTrader and you must trade futures to trade with us. Okay, that's what we do. And it cannot be the free version of NinjaTrader. It has to be a real version of NinjaTrader that gives you live data. So I bracketed the trade. I was anxiously awaiting, but not nervously, just excitedly awaiting the Australia report, expecting a winning trade, because it's one of our next generation winning trades, over 60% to 70% profitable. And I made over $100. It shows 100, but I had traded previously and I was down 60. I made $160 in 8 seconds. Members in my room made significantly more money than I did. They were trading bigger. One of my members, Alex from Hong Kong, made $850 on the exact same trade. He traded 7 contracts. I traded 2. And that's the key to our service. The amount of contracts that you trade is a better way to do it than trying to get more ticks. So the reason the reports work is because the result that is expected is going to be different from the forecast. That number is called the offset, the news offset. If they expect a number of 10,000 barrels of oil to be used and 20,000 are used, that's an offset that's pretty big. It's double what was expected is used, so more oil was used. So if more was used, you would expect the price to go up because there's less oil around. So oil would probably burst on that news, and that's why the market reacts to the news or to events. Numbers are released, they're different from what's expected. That causes large moves in various markets. Okay, everybody understand that? It's not that complicated. The second step we do is we bracket the trade, as I showed you. We trade housing starts and building permits. Negative news in this recent trade, there was a big difference. In fact, it was one of the most impactful housing reports in a long time. We trade gold on that report. When gold gets negative news, it usually goes up. When gold receives, and when the market receives positive news, it usually goes down. So that particular trade, ironically, I didn't bring that one. I brought so many other trades just to give you an idea of another trade that we have. That housing trade, I'm sorry I didn't bring it. It was an amazingly beautiful trade. It exploded. But I'll show you a different trade that did the exact same thing, because they all of our winning trades, almost all of them, work in a similar fashion. They're going to react to the news, and this was a collection of 3 of our next generation trades. This was consumer confidence, and this was a trade that didn't explode, and I'll show you. It moved so, but members that understand how to trade were patient, and as you can see, it's moving in the direction. The news was positive. it makes gold go down. And when this trade was over, look at the move. We're not looking right now at the money. I want to show you the move because that's what we are trading. We understand that this trade moves a lot. So the idea is you want to make sure your targets fit the move, and you want to make sure that you understand how to trade it. So we watch a multitude of different housing reports all the time. But before and jobs reports or consumer reports, and before every one of these reports, we release something that I'm going to get into in a minute called the DMM. So natural gas explodes on news on a regular basis. Just to give you an example of how fast natural gas can move, this was a natural gas trade, and I'm only showing the speed of the move. I don't care what natural gas did in this particular trade. Just look at that move. It was humongous. Okay. Now that is a very large move. They don't all do that, but that was an extremely large natural gas move. That trade, if you had traded it, might not have worked because it went up and then it went down. That's not as common as the trades that go in one direction. Otherwise, I wouldn't be here. Natural gas is one of the more risky appointment-based trades that you can take. What we spend our time doing, and it's something that our reports represent to people, is we find what we feel are the safest reports to trade. And we do it in 10 minutes or less. An event happens, news, earnings, market opens, end of the day, the market moves, and you're in and out of the trade really quickly. One more, we have a trade every Tuesday. It's called the API trade. We set up a range on this trade. It breaks the range. I'm positive. It's an oil trade. I now move my stop safe so that I'm working on the market's money. And bingo, it's going to hit my target. And I'm up 13 ticks. That all took about a minute. Okay. And I'll show you last week. This is a weekly trade. One of my members sent me a copy of his screenshot while he was in the trade, not even done yet. And he was up $1,320. Before he was done with the trade, he was about 2 ticks away from his target, which he did hit. Very, very, very exciting trade. That's a weekly trade, and we issue a report for that trade every week, and it shows you how I'm trading that report. So now you know that there are hundreds of these 10-minute trades. How would you like to have only the best trades delivered to you on a silver platter? We have spent 7 years and thousands of hours researching and backtesting these appointment-based trades. And we've narrowed the field down from hundreds to just the top 1 to 3 trades of the day. And those are the ones we focus on in our trade room and our live trading. So why are these 1 to 3 trades each day worthy of making the cut? They're based on trade triggers that have the highest probability of moving the market, and thus they have the highest probability of resulting in a successful trade. And we call them daily market movers. Every day, at least 4 days a week, we send out a one-page report on each of the top 1 to 3 daily market movers for the following day, the day before. So you have a full day to prepare for the trade. Every daily market mover report includes what trade trigger we'll be focusing on, which contract, which instrument. In other words, are we going to trade gold or the Australian dollar or the S&P or the NASDAQ, the NQ, the time of day for that trigger, which market, like I just said, we'll be trading. We go over the historical performance of the trade over the last 12 to 24 months, and it's specifically the last 6 months. Most of these trades are monthly, although that API report is a weekly. And every daily market mover also includes the risk level of the trade based on its performance, our recommendation on how I'm going to trade it, how I'm going to enter and exit the trade, what targets and stop I'll use, my personal trade journal that shows how we've done on this trade over the past 6 months, or 6 trades, and a narrative that discusses how the trade's been performing historically and how we're going to be approaching the trade. Here's an example of a recent daily market mover. Now, I want to show you one that's even more recent than the one that I have in my presentation. So let me do that. I'll show you the one that quickly that's in the presentation, and then I'll show you a very, very current one. Oh, you know what? I left space to show you, so that's even better. This was that Australian trade that I was talking about. This is what a daily market mover looks like. This is why I'm here today. It tells you what to trade. In this case, it was the natural gas, not the Australian trade. Natural gas, the market is natural gas. 220 was the contract on January 9th. It had a risk of 4. Natural gas is a high risk trade. Even given that, it had 5 out of 6 recent winning trades using our setup, which is highlighted on this yellow line. I bracketed the market with a 7-tick bracket above and below the current price. I activated the trade 1 second. I activated our software 1 second before the news got released. We have a rule that we cancel the trade before the real news is after the news is released. In other words, if natural gas is released and in 10 seconds there's no fill, we cancel the trade because that's too long to wait for 99.9% of all natural gas reports to fill a trade. We have recommended targets that I'm going to use and a recommended stop. We talk about the historical performance in ticks up here in these boxes, and this is on every single trade we take. The journal, and we also talk in text in general, just plain English, how you might set up the strategy, where you might put your brackets, why you might use the certain time to get the report ready for you. So that's a very current natural gas, what we call the DMM, the daily market mover. And then I wanted to show you the Australian one. This is the Australian one. Australia employment change. That was that really super fast winning trade I showed you. The market is the Australian dollar. March contract, and 5 out of the last 6 were winners. It's now 6 out of 7 because our last one was a big winner. And then it explains down below, why some reports might have been canceled previously. Excuse me, how the report's doing in 2019. In other words, you get this the day before the report, how I'm going to set it up, the trade on this yellow line. So if you're not using our software and if you're not using NinjaTrader, you could use something like TradeStation or Infinity to put brackets on your dome and practice in sim to see how our reports would be. So anybody could use these reports to practice and see if it's a viable way, a way that you might be interested in trading. So as you can see, we put a lot of time and energy into these reports so you don't have to. And here's what one of our members had to say about the daily market movers, and he's still a member today. I've been trading for years, mostly unsuccessfully, and when I had an opportunity to subscribe to the daily market movers reports, I figured it was worth a try. I was pleasantly surprised with the detail in each report, 6 months of history, specific bracket settings, targets and stop losses, execution times down to the second. I traded the reports in sim for a month and documented the results. Bear with me 1 second. I'm choking to death here, I apologize. I had many more wins than losses and showed a nice profit at the end of the trial period. And that's true what a member had written to us. And last week, I traded 3 reports live, made $1,550, the best results I've ever had trading the news. That's one member's response to the reports that he had just subscribed to. I've been trading for over 20 years. I'm so happy to find a method that can free me from being glued to the charts. A monthly subscription to the daily market movers is normally $49 a month, and we feel it's worth every penny plus. Because you're here, we want to make a special offer to give you 90 days of the daily market movers for just a fraction of the regular price. So here's the deal. If you take action today, you'll get 90 days of the daily market movers for a one-time investment. That's 3 months for just $27. That's a $147 value, $49 a month times 3 months, the regular price, but it's just $27 today if you take action. Not $27 a month, but $27 total for the entire 90 days, an 81% discount. So you can get the daily market movers just 27 bucks for 90 days. We're not going to auto renew you. www.getdmmnow.com. Very, very simple, very easy. Okay. It's not a subscription. It's a one-time investment and it will not auto renew at the end of 90 days. Our hope, obviously, is that you'll love the daily market movers so much that you'll manually renew at the end of 90 days at our regular price. But if you don't want to continue, that's fine too. Just do nothing. You'll never get charged again. So get the daily market movers, $27 for 90 days, no auto renewal, www.getdmmnow.com. So you have a choice to make. You could easily spend an hour or two researching each individual trade trigger out of hundreds, figuring out which market to trade for each trigger, and then back testing the trade over and over again to see how well it performs. Or you can get 90 days, that's 3 months, for a one-time investment of the ridiculously low price of just $27. Let us do the hard work instead. That's 1 to 3 trades per day, sometimes more, at least 4 days a week for the next 12 weeks. That's 90 calendar days. You'll get an average of 11 market mover trades per week. I showed you the schedule. We have well more than that of events that we trade. Not every event gets a daily market mover. The daily market movers are special. They're the trades that we feel are going to move the best. If all you did was save 1 hour per trade in doing the research and back testing your own, you'd save 11 hours a week. That adds up to 132 hours over 12 weeks, the 90 days you're getting the reports. At just $27 for 132 hours you'd spend doing all that research and back testing, it comes to less than 21 cents an hour. No matter what your day job is, your time is worth way more than 21 cents per hour. And here's a bonus. In addition to 90 days of the daily market movers, once a week for the next 12 weeks, you'll get a 10-minute trade of the week video. And I'll show you a screen capture recording of how I traded one of the daily market movers for that week in my live account. It'll be just a short 3 to 5 minute video of the trade. Many trades don't even take that long. You saw a couple of trades, they end in 8 seconds, but I'll break down exactly how the trade went. Occasionally, it might be a lesson on what not to do and how I plan on adjusting my approach before the next trade. So when you sign up by clicking the button below, you'll get a full 3 months of the daily market movers. It's an average of 11 trades per week plus a 10-minute trade of the week video. 10-minute trades is what we mean. It's not a 10-minute video. Every week showing one of the market movers in action. So take advantage of this huge discount. Let us do all the heavy lifting for you when it comes to finding the best 1 to 3 appointment-based trades every day. So we would love if you would sign up, get the daily market movers for just $27 for 90 days, www.getdmmnow.com. And before I go, let me answer some questions. We don't trade Forex, it's futures. The spread can get enormous on brokers. Johansson, that's true of futures of Forex brokers. That's not true of futures brokers. The futures brokers do not change the spreads during and right before a trade. So it's not an issue with futures brokers. And that's exactly why we trade futures and not Forex. People tell us all the time that the Forex brokers manipulate the prices before trades. That's not fair. and the futures brokers do not do this. Before I go, I've got a couple of minutes. I just want to show you a couple of trades that these reports have led to. So one of the things that we traded, I showed you the Australian jobs report. I showed you the CB consumer confidence report. I want to show you a trade called existing homes. I didn't even trade this report. Where we would release a report, it would have a bracket of 4. It would have an entry time of 9:59:58. It would have targets, and watch how this trade would have worked out if we had told you how to trade it. Existing homes came out, they exploded down, and our report would have told you to take targets roughly 5 ticks, 12 ticks, a stop of 7. Very, very profitable report. And our reports often lead to trades like this. We had a report for the ECB press conference, a very unusual trade. We traded the euro, and we told people you might want to trade this event at 8:35 in the morning that the ECB did their refinance rate. It's an 8:35 trade. Watch what happened at 8:35 on this trade. We told people how to bracket their software. They bracketed their software. We give this trade a 30-second cancel. We told them to trade the euro. It filled the first target, and it's going to go on, I believe, and fill the second target as well. And when the trade was over, there's the target, 36 seconds, 32 seconds, sorry, 32 seconds, that trade was over. We should call ourselves 10, 30-second trades, not 10-minute trades. Point is, these trades happen fast. We have another couple of trades. Let me show you what we call our next generation trades. This was Australia employment I showed you, and then there was one more, US retail sales. Our members we have a report for US retail sales. Members made $340 on the last retail trade. Another member made $180 in 20 seconds, and another member made $1,100 in about a minute, US retail sales, and we generated a report for that trade as well. The US PPI, we generate a report for that trade. This report was not gigantic, but you know what? A winner is a winner is a winner. And you can add contracts to the reports that we know are a little bit smaller, and we tell you if a trade is a little bit smaller. This was US PPI. The news came out. It was mostly negative. It made gold head up, filling all of our targets. Almost every single person in our trade room was a winner that day. And that's the way we do it. Richard, we don't trade options, futures only, Ninja Trader strategy, and it's during the day, so you have to be able to subscribe to data. Our reports are just $27 for 90 days. www.getdmmnow.com. It's very simple. How about I'll show you one more trade that we took. Let me just find a live one so you can see a live trade, because live is everything. We have a report. It's one of our prime trades. Our prime trades are 80 to 90% profitable over the year. This is the ISM non-manufacturing trade. Here's a live one where we generate a report. It's an awesome trade. I can't remember the last time we were stopped out of this trade. Here is the trade right now. It takes place at 10 o'clock. The news came out. It exploded gold down, and when the trade was over, I was up, I believe I was up $450 on that trade when it was over. ISM wins. Here's another one. ISM Manufacturing. What we do in our trade room, what I'm zooming through is previous reports. This was January's ISM trade, January 2020, I might add. When the trade was over, it hit all my targets. Actually, I believe, let's watch. Yep, hit all my targets. $440 profit, 10 seconds. And that was based on a report that we generated the day before the trade. Usually, there's the report that we show in the trade room, and that trade was taken January 7th, 2020. Very, very, very current trade. And that was a $440 profitable trade. So my time is pretty much done. We'd love for you to get www.getdmmnow.com. Any last questions? So no, we don't trade options. You don't want to use Forex. You want to use futures. We trade with NinjaTrader, and we will absolutely help you to understand how to read the reports. If you have any questions about what we do, please just send me an email, help@10minutetrades.com. I'll be more than happy to help you with anything you need help with. And my name is Leigh Goldstein. I'm the trading director at 10 Minute Trades. And in the trade room, you can talk to me directly and ask me to explain these reports to you before any trade that you're interested in taking. Okay, folks, so if there's no other questions, I want to thank Anna and Investors Expo once again for having me on. It's a pleasure to be here. And as we say all the time, folks, I'll see you in the trade room. Take care, everybody, and have a great day. And Anna, thank you very much.
Welcome everybody to how to virtually guarantee your trading profits and protect yourself from losing money. This is brought to you by Brian McAboy of Inside Out Trading. That would be me. And I'm glad that you're here. I mean, really, I'm excited, and there's a reason for that. I mean, first of all, you're looking to grow and develop as a trader rather than just, collect the latest shiny object, and that I commend you for. It's excellent. I'm also excited because what I have to share with you will have an impact on you and your trading. Again, this isn't just another thing. This is a whole different perspective. And it's been proven to be highly effective and consistently produce excellent results for everybody that I've shared this with. Now, why you should be excited too, I mean, really, today can be the start of a completely different future for you and your trading. This can be that pivotal turning point you've been looking for if things haven't been going the way you want. You can leave behind your old experience and old story and start a new chapter. That's really typical what happens with people when I run across them. And the reason you don't want to miss this, really, I mean, without what you learn here, some, if not all of your current challenges are likely to continue. And the thing is, you're here because you want better, you want to win. And the thing is, you're not likely to figure this out on your own, at least not anytime soon. This kind of stuff just doesn't lend itself to that. And you'll see what I'm talking about here real soon. Now, as far as our agenda for this presentation, we're going to start off with, who this is for and what you'll learn. I have a gift for you. I'll tell you about that. Real briefly, my story and, how I wound up being here talking to you today. We're going to talk about the challenge at hand, the solution, and the next steps. So the thing is, you're in the right place if you don't want your trading profits to be left to chance or the whims of the markets. You want your profits to be predictable and consistent. And as a trader, you want to be really fully self-sufficient and, truly independent as a trader, not dependent on anybody else, for your daily trading and your ability to make money. Now, are you ready? Are you ready to have more confidence in your trading, to take the emotions out of your trading, to eliminate inconsistencies from your trading, and really to know how to get your trading working when it's not? Because that's what those are things we're going to be covering today. What you'll discover, first of all, you're going to discover an obstacle that's been holding you back that you didn't realize was there. You're also going to learn an incorrect assumption that nearly everyone makes that creates massive frustration. And really how most traders do things backwards and how you can fix that if you've done it too. I did when I first started out, so don't feel bad if that ends up, that yeah, it's true for you. Other things you're going to discover is how to create multiple streams of income with your trading, how to add $5,000 a month to your trading account, I really, and this is not an exaggeration, how to virtually guarantee your profits and protect yourself from losing money. Now, we do have a short time. We only have about 45 minutes, so please make sure that you do pay attention. During this time, I've got a lot to cover. I'm going to give you as much as I can in this time. Please save your questions for the end. Hopefully, we will have a few minutes. I expect that we will. Turn off any distractions. And that's for your benefit. I mean, for you, so that you can gain, the benefit that you're here for. And really, if you want to take this further, I'll show you how. Yeah, I got a special for you, or a special offer for you at the end. If you like what you hear and you want to take things further with me, great. If not, that's fine too. I know that you will get good value out of our time that we have here together. Now, I have a gift for you. It's called the Trading Plan Financial What If Analyzer, which is really cool. Lets you look at different scenarios. And that way you gain clarity and confidence by seeing really what's going to work best for you. And it's my gift for you for following through and staying to the end. Now, you may be wondering, okay, so yeah, who's this Brian McAboy character, and why should I listen to him? Well, first of all, I'm a certified quality engineer, and that's by the American Society for Quality. For over 14 years now, I've been helping traders use tools and practices from quality assurance to fix their trading, get consistent, get profitable, and then grow their accounts. And my proven track record of success is the reason why other trading educators, trading professionals, and brokers come to me for help. Now, for example, what others have to say, John Foreman is a professional trader. He also used to be a professional market analyst working for Reuters. He also teaches trading in college. What he had to say is, Brian McAboy brings a refreshing new perspective to trader development. His background in process engineering really lets him approach things in a completely different way than most trading educators. As a result, you won't get the same old tired material from him. It will allow you to see your trading from a whole new angle, one which can definitely help you be a better trader. And over the years, I've been featured on a lot of sites. I've done podcasts, trainings, webinars, articles, working with a lot of other traders. I've created a lot of different resources over the years as I found gaps in what's available. I've also created quite a few useful tools and trainings. Over the years, I've created a lot of different resources to help people overcome the variety of challenges of being an individual self-directed trader. And I've had the privilege to get to know quite a few of the good people that have chosen to pursue trading, and through my courses and books, I've helped thousands of traders. But it wasn't always like this. When I first started out, I actually had the misfortune of starting off making money and doing really well. But it was probably the most stressful and emotional period I've ever experienced in my life. I mean, I think I aged probably 5 years that first year, and certainly a lot of gray hair. Every time I'd get into a trade or check my account, it was just a massive emotional rush, and especially when things were going well. It was just weird. It didn't seem to matter if my account balance was going up or down. I mean, I knew I was too young to be having a heart attack, but that's what it felt like sometimes because of the adrenaline rush and my chest getting all tight and my heart just pounding. And then when I started the downward spiral of finally blowing up my account, it was just unbelievable. I mean, a little technical difficulty. Yeah, I mean, I had a hard time understanding what the heck was happening to me in my life. I mean, here I am, normally a pretty prudent and reasonable person, watching myself as I destroy my account. I was fully aware of it, and I was conscious of it. It's not like, what was happening without my awareness, but I was not able to stop myself. And I lost almost 50 grand. Not needless to say, I took a break from trading to regroup. And now the cool thing is about this, you see, my background is engineering, and especially quality engineering, which I thoroughly enjoy and I'm good at it. Before trading, I've been working as the quality assurance manager at a $100 million manufacturing plant, and we were #1 in our company for both quality and profits. After getting my head kicked in with trading, I was like, well, duh. Being honest with myself, I had just jumped into trading and treating it like a business opportunity or a weekend in Las Vegas. So it just looked so simple and straightforward. I was like, hey, I get it. There's no training needed here. Let's just get busy making some money. I totally had the wrong mindset about it, and so I stepped back and took what I've been doing to make the plant successful. And when I took the quality assurance stuff that I'd been applying in manufacturing, it was so perfect for trading. I mean, think about it. One of the biggest issues you hear in almost every conversation about trading is consistency, right? Well, that's what quality is all about. Quality is how you get what you're doing dialed in and consistent. That's like one of the foundational precepts of quality assurance. And that, I mean, that's what I've been doing at my full-time job. And like I said, I was good at it. Our plant rocked. We were the best in our company. I took what I'd been doing there and I applied it to my trading, and it was absolutely amazing. I was able to come back to trading and just step into it, and it was not an emotional ride. I hit the ground running, and it was just smooth sailing. And that's how I was able to quit my job in 2005. And I've been free ever since to live my life on my terms, which was the whole objective with starting trading in the first place. In 2006, I started helping other traders, and one of the things that I teach people is how to do this same thing. Now, I'll tell you more specifically about what I teach that works so well here in just a minute, but first, I have a question for you. You know how everybody's always looking for a good system? Well, why is that? Well, because system implies repeatability, right? You know, where you have that guide to find, place, and execute profitable trades over and over again, consistently, and most importantly, predictably, so that you know you can count on it to produce. Well, I mean, the whole idea of a system is do this, do this, do this, make money. Do this, do this, do this, make money, right? I mean, that's why you want a system. And when what you have when what you have actually is a good system and it works as intended, that's when your profits are virtually guaranteed. Again, because the system works. Here's the problem. Most systems out there are based on what sound like good strategies for getting in and out of the markets profitably, but as systems go, most of them suck. They really do. Some might work for a week or two or three and then stop. Others don't work at all. And trying to create a system of your own and get it working, all this is very difficult and time consuming. So most traders wind up, looking to get a system that somebody else has created, and then things usually go like this. What nearly all traders do, step one, assuming that the system, keyword assuming, that the system they have is well designed for consistency, they jump in and start trading real money. And profits are hit or miss, creating a ton of self-doubt, anxiety, stress, along with frustrating losses, and it doesn't take long until they start messing with the system. And they quickly realize, well, that only makes things worse. And so, finally, the attention comes around to focusing specifically on trying to be consistent and sticking to their system, usually in the form of blaming themselves and thinking that they just need to be more disciplined. Does any of this sound familiar? Well, see, here's the big disconnect and why so many traders will wind up buying system after system after system. The way they're presented and what everybody thinks is, okay, you get this clever strategy and slap some rules and indicators along with it. And that's a good system. But the thing is, a clever strategy with some rules and some indicators does not equal, and not necessarily, it doesn't equal a trading system that can be executed consistently over hundreds or thousands of trades over an extended period of time. That's the big disconnect. See, so the assumption that so many people make is that a good strategy somehow automatically makes for a good system. And that's the problem. It just isn't true. Even a lot of system creators fall prey to that erroneous assumption. They'll have what's a good strategy, maybe something they've been doing for years, and they can do it, because subconsciously they're making all the trades, right? But when they put it out there for other people to use, nobody gets the same results. It might sound familiar. And then they get all offended when people tell them that their systems are junk. So the challenge remains, okay, how do I find a good system, one that I can count on to produce consistently? Well, this actually opens up, several other very important questions. How do I know a good system when I find one versus one that just sounds good? If there are issues, how do I fix them? How do I know that the system will produce without having, me having to lose money in the markets to find out? If it doesn't produce or only kind of works, but not the way I want, how do I get it, to perform without making a mess of things or over optimizing and curve fitting it? How can I have the confidence in it, that I need to stick to it when I hit a few losing trades that I didn't expect? Now, if something changes and the performance drops off, what do I do? Well, during my first year of trading, these were some of the questions that I ran into. Maybe you have too. Well, without answers to these questions, that's how emotions flare up and make disciplined trading really difficult. And this is exactly where my quality assurance experience and training were so helpful. First of all, you have to understand the nature of what you're dealing with, what you're actually looking for. Here's what I mean. There are two problems with this statement. All I need is a good system. I mean, there's two problems with that. If that were true, well, And there are plenty of proven systems that are published and readily available. I mean, example, it's been around for 50 years now. In Nicholas Darvis's book, How I Made $2 Million in the Stock Market, he lays the system out in detail, the one that he used to make all his money. So, people saying, all I need is a good system. Well, no, they're out there. But the thing is, even with Nicholas Darvis's book and everything, people have been unable to duplicate his success. And so again, the problem is misunderstanding of what makes for a good system, or really even just a system in general. And here's what I'm talking about. What is a system? I mean, well, okay, I'm asking you, so because I want you to be thinking about it. A lot of people just take it for granted. But anyway, I polled my readers a while back, and the common answers that I got were, it's my system, it's my rules, or my indicators, or my rules and indicators. Well, no, not really. You see, those are tools. They're part of a system. They're things you use in a system. Your system, though, is what you do. That's a really important item to distinguish and understand. And you're going to find out here in just a second. It's just like, what is trading? Well, most people think, oh, it's buying and selling securities, to make money. Well, in one respect, that's true, but really it's a process. It's a decision-making process. Again, it's really important that you understand that if consistency is your goal. A very common problem that you have, I mean, as a trader, you're placing dozens or maybe hundreds of trades a year. But of all the people that I've talked to over the years, less than 30% have their systems documented, and almost no one actually uses what they have documented. Most people are going on memory, and that's a monstrous problem. I mean, the problem with that is that it's so easy for how you interpret things to change from one week to the next, depending on how you're feeling. I mean, if you've been having a rough week, you might look at this chart and say, "Ooh, that's not a good setup." Or if things have been going great, you made money this morning, and then you look at that same setup and say, "Yeah, that's a great setup." How you interpret, what you're looking at, that can all change, plus a whole bunch of other things. When you're working with a system that's not documented, it's not defined, or it's written down but you're not using it. If you're going off of memory, that's just a huge problem. As far as achieving consistent profits, I mean, here's the thing. If you want to profit as a trader and do so consistently, you must be very intentional. You can't wing it or go on memory or hunches or be sloppy. That just doesn't work. If you want consistency over hundreds of trades over a period of time, you simply can't do like everyone else, where you start trading and then try to hammer consistency in as an afterthought. That doesn't work. Tens of thousands of people have proven that. Let me show you the quality assurance approach I use to make my trading so reliable that I could quit my corporate job. Now, this is also the exact same thing that I teach my clients so that they can grow their accounts. One of the cool things is that this works for any style of method or style or method of trading. It does, because it's not method specific. You can use this with your current system or any method or system that you want to consider using. Now, I call this the quality assurance model, and this is where so many people get an aha moment when they understand what we're about to talk about here. It's really cool. I mean, you want to create your strategy. I mean, you want to execute your strategy well, and you want to do it well every time, right? I mean, if you have a good strategy, you want good execution every single time, and you want to know that you're going to be executing your strategy just as well, today, next week, next month, 3 months from now, 6 months from now, a year from now, as you do today. Well, just like in any business, but especially for traders, inconsistencies are a direct cost and come straight off your bottom line. So that's why in quality, we start here. Step one is to craft your winning trading system and design your process specifically for consistency first. That's huge. With the quality assurance model, we establish consistency first, then start trading and build on your success. And one of the great things is that the repeatable and reliable aspect is built in from the start, not after the fact. Okay, so how do we do this? Well, the first thing is to define your trading process. Now, when I present this to people, sometimes it makes people mad, hurts their feelings, but it's true. W. Edwards Deming he's like the father of quality, the whole global thing. He was the guy who started it. And his comment is, if you can't describe what you're doing as a process, you don't know what you're doing. And as sad as that sounds, there are a whole lot of traders that are working with a system that's not really a system. It's kind of like an idea for a system. And they can't describe what they're doing as a process. And then they wonder why they're struggling with consistency. It's because they can't even describe it as a process. So that's the first thing we've got to do. And when you learn how to do this properly, when I teach my clients how to do this properly and how to define their trading as a process, it just calms your mind down. and makes things so much better. Now, again, if trading is a process, your system is your procedure. Your system is your decision-making guide. And it's your step-by-step procedure for finding, entering, and managing and exiting trades. And a good system is well-defined and properly documented procedure. That's the thing. Without a proper procedure to follow, inconsistency will result sooner or later. I guarantee it. I was in quality for like 20 some years, and anytime I audited our plant, I audited other plants within our company, I audited supplier plants, and every time consistency was a problem, the procedure was almost always a contributing factor. It was either a lack of it or a poor one. And same is true in trading. Now, this really is the basis for everything else. Think about it. If you don't have a properly defined and documented procedure, if what you're doing isn't properly defined, most everything else you do will be of limited value. I mean, this really is the heart and the starting point for consistent results. So that's the first thing that we attend to in my training programs. And when you use this, instead of frustration with winners that you cut short or miss out on, losses that really shouldn't happen, your execution is solid. You get the most out of every winner, you keep your losing trades small, and at the end of every day, you feel good knowing that you've performed at your best. Like for example, Mark Barton sent me this note. It says, "Hey Brian, I've been hesitating so much that I actually started tracking it and found that I was hesitating on more than half of my trades. Since you helped me fix and document my system, I've seen a dramatic and measured improvement and feel much more confident, relaxed, and able to pull the trigger when I need to than before." Okay, so step 2, after we've got it, defined and documented, now we want to confirm that it works as intended and produces the desired output. We want to confirm that it works. Okay, as far as confirming expectations, the second step of this process is you take your system, now that you got it defined and documented, we want to prove that it works. And this is where we attend to the catch-22 that gets so many traders off on a wreck. I mean, most traders can't stick to their system long enough to establish the confidence they need to stick to it for any length of time. I mean, they just can't go long enough to get that good, solid confidence they need. So when we test that and we prove it out properly, it confirms the system's potential for profit. And we also determine the strengths and weaknesses so that you have good, clear knowledge of what your system can and can't do. This is really critical. Now understand that simple back testing by itself isn't enough. A lot of people will come to me and say, "Oh, Brian, I get it to back testing and everything, but I can't seem to get my regular day-to-day results to match up with my back testing results." That's a really common problem. Now, that's from an understanding that you do need to test things to prove it out, but you also have to have an understanding, a proper understanding of the testing process and how to go about it the correct way. I ran into this in the manufacturing world. I've run into it in trading. It's the same thing. You have to understand the testing process and how to apply it, and also how the numbers are generated, where they come from, so that you know when to count on them and when to challenge them and when to flat out ignore them. I mean, the whole reason for this is you want to go into your trading day with realistic expectations. That's absolutely critical. If you're thinking that your system is never going to have more than 2 or 3 losing trades in a row, and then all of a sudden it hits 5 or 6, which are perfectly normal, but you had the false perception that 2 or 3 is what you should expect, that 5 or 6 is going to totally throw you off in a wreck and destroy your confidence, and that's when you're going to be really tempted to start messing with things. Realistic expectations are critical, so knowing how to prove it out properly it's just absolutely critical, so that you know its true strengths and weaknesses. You have realistic expectations. Okay. Again, this is, critical for confidence and discipline. And think about it. When are you most likely to deviate from your system? It's when you're feeling nervous or anxious about what may or may not happen, right? And you're worried and you're fearful. But when you know, and you have that just knowing down in your bones that your system will deliver and what to realistically expect, sticking to your system becomes easy. And that's why we confirm and we make sure we're using a proper process. Again, it's the proper testing and analysis are key in all this. In my quality assurance days, I learned the importance and value of testing and analysis. When it's done incorrectly, it gives you false expectations. That's so hurtful to traders from a psychological standpoint, from a confidence and self-esteem standpoint. If you're going into it with wrong expectations, you're going to have all sorts of unpleasant surprises, disappointment, and frustration. And that's where so many traders wind up blaming themselves because they had, improper expectations about their system. But when you do it correctly, though, it dissolves your fears and concerns and gives you a tremendous peace of mind. So this is just a huge impact on your ability to trade and trade well and consistently. And again, have your profits be a known thing. not left up to chance. Now, when you use this, and instead of most days being stress-filled, emotional roller coaster rides, you're at ease. Instead of having to fight down your fears and anxiety in order to stay disciplined, it's pretty easy. Instead of having no clue about how much you'll make this month, if you make anything, you'll be relaxed, knowing what's realistic for you to anticipate to the dollar. You'll actually have a dollar amount that you can honestly expect to make from your trading, which is so cool. Most traders have no idea what they should be making. Richard Stewart sent me this email. He says, Brian, I must say that since I began analyzing my system in detail per your lesson, I've become more confident and more relaxed. And for him, that was just huge. Richard Daniels, he sent me a note that says, hey, Brian, just a note of thanks to you for the TPA, that's the Trading Performance Analyzer. I've been back testing a new to me system and plugging the results into the analyzer. The information it gives me is vital to understanding what this system or any system can do. Now, here's the big thing. It's giving me a confidence in my system that otherwise may have been shaken by a few small losses. That had been a huge stickler for him for years. So those are the first two steps. The third step is now we want to make things better through continuous improvement. And I got the ASQ thing up here because really this is quality applied to trading. But from the American Society for Quality, this is stuff I did in manufacturing. I taught other business owners how to do it. I teach traders how to do it. This stuff is really cool. So in step 3, as far as making it better, this is where we're maximizing your profits. And the cool thing about it is you get to further establish your confidence in your system through maximizing its profitability. This is where we dial in your system so that it delivers to its full potential, not leaving money on the table. And the thing is, you don't want to guess or just shoot in the dark as far as optimizing your system. You want to make changes in a calculated and business-like manner according to a specific methodology. Now, a common mistake that a lot of traders make is they don't even bother to tweak or dial in their system. It's like as soon as it starts making money, they just go, they just trade, and they never bother looking to improve it, and they leave tons of money on the table. Instead of just plugging along thinking your system is fine, well, you're leaving all kinds of money on the table. You'll know that you're good and your system is producing what it really should. That's huge. Another common mistake is not having any kind of methodology for this. A lot of traders, they just try stuff. They make changes, and then they make more changes, and then more, and then after a while, they've got a system that isn't producing, but they don't know, what changes they did helped and what didn't. By having a proper method, you stay in forward progress mode using an organized, calculated approach. For Philip Johnson, he sent me this. He says, hey, Brian, I used to get so frustrated and angry knowing my system could do better, but I had no clue on how to affect changes except for trying random stuff. As a result, I'd make a mess of everything, and I had no idea what worked out of the things I'd tried. Now, I know how to really tweak my system in a reasoned and calculated manner so that I know that I'm actually making my system better, and I'm seeing the results. But it's cool the way this works. And again, it's not by accident. This quality has been developed for decades. Now, step 4, once you get everything working and it's tweaked and it's just humming along, you want to monitor and adjust, because sometimes things will change. You might get a change in the market mood. Something may change with the rules on if something come down from the CTFC or whatever. You can get exchange offerings that affect the way things behave. There's a whole list of things that can cause changes. What you want to do, you want to monitor your system's performance and adapt to changing marketplace conditions, but do it in you want to use a properly organized method, and so that you stay in forward progress mode, and it's for continuous improvement. But again, having an organized method and knowing when to look to change and adapt and when not to. Now, when you use this, instead of feeling frustration of things just not working like they used to, you'll have your thumb on the pulse of your processes, and when things change in the market, you'll be well equipped with the key information to make appropriate adjustments and not only survive changes but profit from them, which is a bonus. I mean, that's one of the reasons we love being traders, is so that when something changes and everybody else is freaking out, we're saying, hey, great, I'm going to be making money. So anyway, Bill Robinson, he sent me this. He says, Brian, before, when there'd be a major shift in the market mood or something like 2007, 2008, I'd be scared to death and without a clue what to do. Now I don't worry. You've taught me how to adapt to changes in the markets, knowing that I'll be okay. This by itself is gold to me, just having the peace of mind. And again, as you develop as a trader and you become more skilled with yourself and what you can do, not just the tools or the systems that you have at your disposal, but you grow as a trader. This is the kind of stuff that results from it, which is just excellent. That's why I get jazzed up about it. Pat Davis, This is Brian. I was amazed at how easy it was to determine which strategy had the biggest effect on my bottom line. The TPA saved me a lot of time, made the process of comparison much simpler and easier. Here's how he was using it though. I will continue to use it to keep track of my method's performance from this point on. He didn't want to just get, where he's making money and then just ignore it. He wanted to monitor it and make sure that things stayed running well. Now, this process or formula you just saw is what I developed from taking my quality assurance tools and applying them to trading. And I call this formula profit assurance for traders. Sorry about that noise in the background. Anyway, just like the way quality assurance virtually guaranteed that we would run good product in the manufacturing plant, the profit assurance is how you'll virtually guarantee your profits in trading and protect yourself from losing. Now, more on this in just a minute, but one more important matter, and this is important. One huge mistake I see people make all the time is trying to have one system that captures every possible profit opportunity. They've mashed together different systems and indicators and pieces of systems until they have this gigantic mess that doesn't produce profits, and it's really hard to trade, and they don't know what to do about it. Now, understand, there is no one size fits all system. There are only a very, very few systems that can be used at all times under all circumstances. And even then, though, they're still going to have a range of performance. Not everything is going to be at its best at all times. There are three general market conditions that occur on any given day, but also, there are different general moods and external factors which can affect how any given system will perform. Now, if you think about it in the respect that, with trading every day, things can be different. The trading landscape, it's a dynamic landscape. Trading's kind of like football. In a football game, on every down, you've got a different situation in front of you. We're talking about American football. You're going to use certain plays on 1st and 10 and others for when it's 3rd and short, and still others when it's 3rd and long. It all depends on the situation. So as the coach, you have a playbook. You choose which play to use according to the circumstances in front of you. Well, you want a playbook too as a trader. Of course, you have to get one trading system working. So you start with one, but over time you want to develop a portfolio of systems, so that no matter what the market is doing, you have the appropriate system to use and one works in those conditions. So instead of having a big mishmash, a big monster system, what you want to do is have them all broken out individually. Like I said, kind of like individual plays, like a football coach would use. And profit assurance is how you build this playbook. By applying profit assurance one system at a time, you will over time have different systems that you can use so that no matter what's going on in the markets, you're well positioned to make the most of it. Instead of freaking out like everybody else, you'll simply pull out the right play from your playbook and have some fun making money. Now, again, it's all about being intentional and approaching your trading in a calculated, organized, businesslike, and most importantly, a knowing manner. Going on hope, wishful thinking, guesswork, or relying on the claims of others is how so many people lose a lot of money in trading. Now, this very same method I outlined to you is what I personally use to keep my trading consistently profitable and stress-free. If you'd like to give me, if you would like for me to give you my complete blueprint and help you create your own profitable trading operation, I'd be delighted to help you. I'll personally lead you through a series of lessons and exercises where I show you exactly how to define and document your trading procedure, confirm that it works, and then dial it in so it'll meet your goals and expectations, and also how to make changes to your system, when things in the markets change. Now, my mission really here is to give you the skills, tools, process, and experience to trade with confidence and make consistent profits. This training usually takes about 30 days on average for most people, give or take a week. And here's what you're getting. It's called, again, I call it Profit Assurance for Traders. And if you want to document your system in a manner that, that's easy to follow and execute consistently, if you want to know to the dollar what your monthly profit potential is for your trading system, if you want to know what to realistically expect, from your system in terms of profit, drawdown, winning percentage, and average return per trade, if you want to know when to use your system and when to leave it on the sideline, if you want to dial in and tweak your system so that it's delivering maximum profits and not leaving money on the table, if you want to adapt when you need to, but in a calculated and organized way, so that you always know what helps and what doesn't. And if you easily want to track your important metrics so that when you have a drop in performance, you can spot it immediately and know, either go ahead and do something or just leave things alone, you're okay. So here's how this works. First thing we do is, is just preparation. You want to gain them, we'll have to gain the mindset and understandings to really shift your perspective to make good trading easy. And you're going to see how this approach and paradigm has been worth billions in other industries. Again, quality assurance isn't anything new. It's new coming to trading. Step one is where we get into the documentation. Again, this is where we build consistency in from the start, not as an afterthought. We build it in from the start. We define your system to make it super user-friendly, and you also learn how to structure your trading system, how to word things, what to include, what to leave out, and how to eliminate causes of inconsistency. That's huge. Step two, with confirmation, this is where you learn the thought process for testing, and you gain a good understanding of the testing process, how to plan your sampling. Again, huge. And again, where my quality assurance background was just so helpful in everything, being able to bring that to trading. This is one that a lot of people struggle with. Understanding the numbers. Again, a lot of people think, well, is it making money? Great, I'm good to go. No, not necessarily. Does it have a good winning percentage? Maybe, maybe not. That may or may not be a good number to go off of and say it's a good system or it's going to be good for you. The other thing is, and like I said, knowing where the numbers come from and how they're calculated, where the sampling ties into it, so that you know when to believe them and when to challenge them. There's so many people, they don't understand the testing process. They'll back test it and maybe pass on a good system because they didn't test it right, or they may move forward with a system that isn't so great, thinking that it's excellent. The testing is so that you go into it knowing what to expect. The testing and analysis is where you can set your expectations and know what to expect from it when you go put in real money with it. So, and of course, the third step is optimization. This is where you want to use your metrics and your documented system to plan your optimization so that you're staying in continuous improvement mode, so that you only take steps forward. And this is really how you stay organized and know what works and what doesn't. And for my clients, I have them use the Trading Performance Analyzer. This is just a really cool tool I created a long time ago for this purpose. With the Trading Performance Analyzer, it's got a few different components to it. One of them, it's the Trading System Profit Potential Calculator, so that you know precisely how much monthly profit you can expect from your system. It's also got other tabs in it. It's an Excel spreadsheet, but it's got monthly analysis and cumulative metrics so that you can know how well your system is doing, when action is needed, and also gain, track your history on things. It also has a year-to-date tracker so that you can see your system, your trading's month-by-month performance, which is really cool. Now, by now you're probably wondering, about how this might all work for you. Well, when you go through this training, you come out of it a whole new trader. You have a full understanding of how this formula has been responsible for billions in profits and how it's perfect for trading. I mean, I want to make sure I teach by learning and conceptual teaching, so that I'm not just giving you step by step. You're also understanding how things work and why they work, which to me is just massively important. You also come out of it as far as what happens when you come out of this. You have a system that works, and it works well, and the consistency has been built in from the start the right way, and you finally have that good system that you can count on. I mean, that's what you've been wanting all along, right? But you know how to make whatever, your system or any system, how to make it that good system. You go to your trading every day enjoying the ease of trading and consistency that you've sought all along. You stay relaxed no matter what the markets are doing, because you're truly well prepared, and your system's true capabilities and limitations. This kind of stuff is huge, and just being able to trade consistently from a you as the variable perspective. When you know that your system is properly tweaked and for maximum profit and delivery, that's totally cool. And just having a powerful tool for tracking and monitoring your system so that you can act when you need to keep your profits flowing. One of the biggest things really though is the inconsistencies that used to take all the fun and profit out of your trading have now been removed. And it's not uncommon for my students to quickly add $5,000 a month to their trading, very quickly after learning all this. Now, when I coach people through this, there are two primary objectives. First, you come out of it, you have a system that works the way you want. And again, consistency is built in. You have a good solid system that you can count on, that your profits are no longer subject to chance or anything else. They're pretty much guaranteed. Second, you have the skills and understanding to do this yourself, so that you can do this with any system. Again, so that you're self-sufficient and truly independent. You don't need me anymore or anybody else. You can stand on your own 2 feet. Now, also when I coach people, through this, there are 3 different modes, and all 3 cover the same training and take about 30 days on average. The primary difference is how much interaction you want with me. For those that want to work with me one-on-one, every week you get your lessons via video to attend to at your convenience, and then we get on a Zoom call or 2 every week to review your homework, answer questions about the lessons, clarify things and guidance, and again, just the interaction, so that you're getting my personal attention and making sure that your situation and your trading and everything, that it's being very closely and carefully attended to. Some people prefer group learning, where we get on group calls once a week. That's cool too. Others, you just prefer to work with online videos at their own leisure. They don't want my interaction beyond emails, answering questions, and that's fine. A lot of people get into trading because they don't want any interaction with other people. They just want to, it's just me and my computer, and I'm good. So that's fine. With all 3 levels, you also get several bonus items. You get the Trader's Guide to Emotional Management, which is really cool. It helps you understand the psychology of trading, and how a lot of problems start with in the first place, how to fix things that may have come up since you started trading, things that you brought to trading before. Anyway, this is a really handy tool. Self-sabotage is huge, so I include this as well. 4 forms of self-sabotage, so that you understand where it comes from, what you can do about it, and also the 10 essential components of a high probability winning trading system. Now, by now you're probably wondering about the investment. And yeah, I call it an investment because you're making one in yourself. This isn't a thing you're buying. This is trading for you. And yes, one with an expected ROI. It is going to, change you, and your results are going to be different. So if you're ready to, virtually guarantee your profits and protect yourself from losing money and quickly add reliable profits to your account, well, then the next step for you really is to choose which level is right for you and sign up right now. Now, again, there are 3 levels. The one-on-one coaching runs $99.99. The group coaching is $49.99, and the online videos only is just $9.99. And if you sign up within the next 2 hours, you can save 50%. Just use the coupon code EARLYBIRD. And as far as what you're getting, you get the Trading System Mastery, which is the how to fix your trading. You get the Trading Performance Analyzer, the Trader, the Emotional Management Guide, the videos. So it's really cool. And to get started, just go to this link here. I'll put it in the chat box. And when you click on that, what'll happen is you'll see this page right here, and it says Profit Assurance for Traders. You can click on either of these links. The group coaching right now is sold out till April. If you want to, if that's something you want to pursue, that is what you feel is best for you and what you'd like to do, email me. I'll put you on the wait list. But when you come to this page, this is also where you can download your gift. So go ahead and click on that link. It's in the chat box. And now, in case you're wondering, remember, I'm an engineer. I'm trained to make things work. Plus, I'm also trained on how to effectively train others. I've been through that training myself, to train the trainer stuff. As a quality manager, I had a number of responsibilities. Of course, monitoring the processes out on the floor, reviewing data. Training was a huge part of my job as a quality assurance manager, because I was responsible for the entire plant performing consistently. Not just the machines, it was the people. And I was responsible for all 183 people, everybody from the receptionist up front to accounting, to materials, to production, maintenance, warehouse, shipping, the whole 9 yards. It was my job to make sure that everybody was performing consistently day in and day out. So I was very, very heavily involved on putting together the training programs, for setting up the evaluations, and of course, having the metrics and the monitoring systems out on the floor, so that yes, we're also keeping track of everything, knowing that we're getting good consistency out of everybody. So as far as knowing how to train other people on how to get consistent results, yeah, that's my area of expertise and my strength. Now, what's cool is that means that yes, this will work for you. And also, yeah, I've got your back. I also have peace of mind, money back guarantee. This really is the best thing that you can do for yourself in your trading. In the unlikely event, and it very rarely happens, that you put the lessons to use and they don't produce the promised result of your trading being more organized, efficient, and you having a high level of confidence with it, just let me know and I will promptly give you a full refund. It's that simple. I know what I do works. I'm more than happy to back it. If for some odd reason it doesn't work for you, I'll refund your money. Not a problem. So really what you want to do, go and go to the link right now and get started. If you, again, thank you for attending, and to get the trading plan what if analyzer, go ahead and click on the link. And again, I'll pull this page up. Yeah, this is the page that you'll see. And you can just click on the link right here if you want to find out more about working with me one-on-one. and get signed up there, or with the home study online video training. And remember to go ahead and use the coupon code EARLYBIRD, and that'll save you 50% if you go ahead and get registered right now. Now, I'm looking at the time, and it looks like we're rolling up on 2 o'clock, or no, 2 o'clock Eastern, what's that, 11 o'clock Pacific time, which is right on our target. If anybody has any questions, put them in the chat box right now, because I mean, that's pretty much it for my presentation. I hope that you found it helpful and beneficial. And again, my intent with this is to help you understand some things that will help you become a better trader, more successful as a trader, regardless of how you choose to trade, both now and in the future. I do this because one of the biggest lessons I've learned in coaching other traders: untrained traders tend to lose. So I don't just give you, shiny objects and tools. I want to help you become a properly trained trader, because the other thing, a lot of people, they'll struggle with trading. They get into trading, their emotions cause it, make it really tough to trade well. They make a lot of mistakes. They take a beating, and they blame themselves. And the thing is, just the fact that you're, and they think that, maybe they got psychological issues or they have discipline problems. Well, the thing is, that's just plain not true. Most people that get into trading are above average intelligence, above average success, sincere, hardworking people. I mean, work ethic generally better than average. So it's not that you lack the personal assets. The problem that most people are that are fighting is not any kind of psychological or personal issues. What you're fighting is lack of training issues. I mean, think about it. If you take a person of reasonable intelligence and ability, and you throw them into a job for which they have no experience and no training, it's going to be rough. It's going to be stressful. The results probably aren't going to be that great, and it's almost going to be impossible for it not to be an emotional experience. But if you take that same person and you give them the training on the skills they need for that job, so that they're actually honestly prepared for it, they're not going to have psychological issues or performance issues. They're just going to go do their thing, and they'll probably do just fine. And that's been my experience. Again, in the 14 years I've been helping traders, I've seen that proven out time and time and time and time again. Trading is a skill-based business. And if you're trying to be a successful trader without the proper training, odds are not in your favor. If you get the proper training, now, hey, life is good because you're actually properly prepared for this job. So anyway, that's what I've got. Let's see, as far as questions.
Brian, could you please go back to the previous stage that I could type in a link for everyone? It was too fast.
Oh, right there? Oh, I thought I had already entered it.
This one. Thank you. Just a second. Yeah, perfect. Now we have it. Jennifer asking, is there a trial version?
A trial version. Oh, there's the question. I had the chat box open. Okay. Well, let's see. Is there a trial version? Well, no, not really. I mean, it's a training program. It's not it's not a tool. This is training that you're going through. Now, like I said, I do back it with a money back guarantee. If you get into it, you learn what I teach you, and you apply it, and it doesn't produce the results that I say it will. I mean, yeah, I back it completely. I know it works. You put it to use, it will work. If for some odd reason, you put it to use and it doesn't work, I'll give you your money back. To me, that's just good business, and that's fair. And reasonable. Like I said, I know it works, so I do back it. And the thing is, well, one thing, and I also get this question from some people, they say, well, what happens after the 30 days? Well, the way I look at it is, really, this training is not, a one and done thing. It's, here the 30 days is up, see you later, good luck. I look at everybody that comes to me for training. I do this because I want to help. I want to help the good people to get into trading and see everybody make it. I want to see you actually succeed. So this is kind of the beginning of the relationship. If you need my help, you come into this training and great, and it works for you. And then 3 months down the road, you run into whatever issue, and you want to talk to me and bounce ideas off me or get my help then. I consider you a client for life. So, and I've got a lot of clients I've known for years, and we stay in touch on a semi-regular basis, some on a fairly regular basis. So, okay, now let's see.
A member asking, can you please describe the analyzer?
Yeah. Now, as far as the analyzer, again, that's a set of Excel spreadsheets, and it really is set up to do the analysis again for like one of the tabs is called the trading system profit potential calculator, and it's wonderfully, it's really a cool tool. I created it a few years ago working with some of my clients because the backtesting tools and analysis tools that were available were real expensive at like $1,500 and up, and just overwhelming as far as all the, they were involved. And they said, hey Brian, can you just can you build us something that's really simple to use but gives us the critical stuff that we need to do well? And so that's what I did. And the cool thing about it is, it's, like I said, it's a real simple spreadsheet. All you need to do is put into it, a few pieces of information, like your account size, your, your per trade risk limit that you're using, what your drawdown limit is, and then some of your trade information. And really, it's just on a handful of trades. Let's say you grab like maybe 50 trades worth of data, and all you need is what you risked on each of the trades, and then the net profit or loss for each of the trades, and you put those in the spreadsheet, and it generates, it does all the calculations of all your critical metrics that you need. All the stuff about your winning trades, about the losing trades, your your expectancy or your average return per trade, your winning percentage, your profit loss ratio. It's really cool. I mean, it does a lot, and it's super simple. I mean, all you need really, like I said, it is just you take some of your trade data, the risk on each of the trades and the net profit or loss on each of the trades, and it does all the work for you. Plus, it's got some other tools. Well, and the profit potential calculator, it also shows you, it calculates what the monthly profit potential is for that system based on the numbers that you entered, which is really cool. Instead of just getting a number, it says, no, this is what you can expect on a monthly basis from this system based on the numbers that you put in, which is really cool. And okay, Jennifer, I've been through many different trainings for the past 10 years. Not sure what you teach that is new to me. Again, it's the how to make your trading consistent is the key. Defining and documenting your trading system is at the very core of consistency. I've seen a lot of systems. I have a lot of people send me in systems. I mean, if they didn't have it, written down what they were doing, I'd ask them, write it down, and they'd send it in to me. And that right there is at the very core of, whether or not you're going to get consistent results or if you're going to have issues. And so that's one of the primary things, and it's the quality mentality. It's being able to look at a trading system and evaluate it to spot the problem areas, the things that are going to, either give you consistency problems or performance problems, and how to fix them. And again, how to structure a trading system, how to word it, what to leave in, what to leave out, all that kind of stuff. It's really it's how to have your what you're doing at its foundation built from the very start with consistency built into it first. That's really one of the biggest things. The other thing that's really critical, it's different that I teach from a lot of other traders, is in the testing. Again, lots of people that come to me and say, yeah, Brian, I've tried back testing, but I can't get my my actual results to match up with my back testing. It's because people will grab it, some automated back tester, they'll run it, and then they think that's it. There's a lot more to it than that. And understanding the testing process, and again, how to set up your sampling, how to run the numbers, how to evaluate the numbers. Those are the things, the skills and understandings that I teach. So let's see. So Jennifer, you'd also asked, it's expensive. I'm not sure it'll work with me. Well, yeah, it's not for everybody. I mean, if somebody's trading, $1,000 account, okay, yeah, it's going to be a little pricey. If for somebody that's trading, a little more substantial account, maybe your goals are between, say, say you want to add, or make $5,000 a month, or say $2,000 to $5,000 a month. Well, even at just $2,000 a month, if you want to get the online video course, and then right now it's a 50% off. $500 investment for something that potentially going to make you $24,000 over the next year. That's not really expensive. That's a good investment. That's a good ROI. So a lot of it depends on how you look at it. Now let's see, Steve, if you mirror a system that has been overwhelmingly successful for 3 years with entry and exits, what is your comment about this as a system? Well, again, there are lots of traders that have been successful, and when they show, when they sell or share with, what they're doing with other traders, the other traders can't emulate the same success. Even though the original guy had, success, or guy or woman, had success with that particular method or strategy, how you go about doing it on a day-to-day basis is whether or not you're going to, be able to duplicate the results. Again, your system, it's what you do. So that's the same thing. Well, okay, so if you're getting the same success, well, it's kind of a moot point. Obviously, if their system's working and you're copying them, if they have a working system, and yes, it actually is structured properly to where it's attending to the inconsistencies and that kind of stuff, fine. The only thing is, if you're copying somebody else, then here's where you run risk for yourself. You're still dependent on that other person. What happens if the guy gets in a car wreck, has a heart attack, just plain, maybe gets a divorce or whatever and decides to quit trading and closes his doors? You were dependent on him for your source of information for trading. That's one of the biggest problems that a lot of people have, is they'll buy a canned system, even if it does work, but they're dependent on other people. That's a problem with signal services or software. So what I'm trying to teach you is the skill set so that you can take any strategy you want and make it that solid, reliable, consistent system that will perform in a knowing manner. That's the whole thing. Like I said, it's quality assurance. Quality assurance is all about having your process so dialed in and so solid as a system that your output of the process is a known. It's not an unknown where you're subject and left to chance. You get everything, you get it all dialed in, and even the uncertainty of the markets really becomes a non-issue, which is really cool. Okay, Steve, understood. Then I call you. Sure, you can give me a call if you want. That's fine. So let's see, what are the questions we got? Visual and audio, fine. Do you use options? Oh, he's left. Okay. Where's the link? Okay, I've got the links. All right, so let's see. Well, I think if anybody else has any other questions, by all means. Like I said, I'm here because I want to share this with you, because I know that it just the perspectives, if it helps you look at your trading and you can, be a better trader, if you can protect yourself from losing money, that's my objective. If you want to work with me, on a client basis and have me coach you, cool, of course. I mean, that's part of what I do. But if it's just, you want to, gather what you can here, go put it to use. Hopefully you have gained some benefit out of it. That's really my objective. That's why I do this. And I get excited about doing it because, like I said, I share this with people. I learned a long time ago, untrained traders tend to lose. I focus on training to help you become a successful trader, regardless of what you want to trade or how you want to trade. So, Anna, I guess we've run over a little bit.
Told you. No problems at all.
Okay. Well, I guess we can go and wrap things up. I thank everybody for showing up. Again, the fact that you're here and you want to learn and grow and develop as a trader, I applaud you for that, and that's very commendable. I hope you continue to do that. When you focus on yourself as a trader, it only will serve you well. So, Anna, again, thanks for having me here. I appreciate the opportunity to help the traders of the world, and I like working with you. It's been enjoyable. I look forward to doing it again. If anybody's got any questions, swing by InsideOutTrading.com. Feel free to contact me if you want to call me or email me. You got questions, by all means, I'm here to help you. Other than that, Anna, I guess we'll wrap things up. Thanks again.